Wall Street winners. It is Friday, August the 30th, and it has been a bit of a crazy week this week. We've had a lot of data come across the wire in terms of earnings from NVIDIA and many others. We've seen PCE data just came in relatively flat or in line with estimates, so not a huge upside surprise or downside surprise, which is obviously pretty good. We don't want to have any surprises. Surprises lead to extreme volatility that can be rather unpredictable. And we're looking for somewhat predictable volatility in the directions in which we're making investments and hedging our strategies. So I think PCE is going to line up to allow the Fed to make a decision of a rate cut in September. It's very likely to be at least a quarter of a point. Now the question is whether they're going to go to 0.5% or not, 2 quarters. So we'll see what happens as we move into September and we hear more from the Fed. But we can see that mild gains set the stage here for good rate cuts coming forward. The size of those yet to be determined. If we take a look at the markets in the Bloomberg app and the futures in particular, we can see that we're in the green across the board for the US indices. So that is a good thing to see. Looks like we're going to have a good start to the day. If we flip over to our Yahoo Finance app and scroll to the top, we can see here at the top, we've got the VIX dropping, which is a positive sign. It's below 16 now and looks like it could stay there for the day, maybe even drop a little lower. The futures for the NASDAQ are up. We can see that crude is up only slightly, but getting close to $76. So again, if we take a look at crude and what it's done in only 5 days this week, it's gone down into the 74 range. It's gone up as high as the 77, 78-ish range, 77 and a half, and now we're at 76. So it's kind of found a middle ground. I think there's still room for crude to move forward as we still have tensions in the Middle East. And then as we scroll across again, we can see the different averages there. Taking a look on the board, we've got Lululemon. Recorded a short earlier today about Lulu. Lulu came out, they missed their number and they reduced their future forecast. They pulled a certain brand of leggings. I'm not a huge Lulu purchaser myself, so I can't speak to really what they pulled and why, but apparently they pulled a new model of leggings from the shelves just a few weeks after they launched it. And yet their stock is up. So this just shows you that the market is not always logical. Having this stock go up on an earnings miss and NVIDIA go down on an earnings beat is somewhat illogical, but that is what can happen from time to time in the markets. I would still be staying away from Lululemon at this point. I think that there is still going to, the change in interest rate, should they occur, regardless of the size in September, it's going to take some time for that to kick in and be felt by the end consumer. So I think we're still going to see consumer discretionary really held back, and we're going to have a lack of discretionary spending as we have in the last quarter from consumers. And so they're not going to purchase high-end purchases like a pair of Lululemon leggings. They're going to put that towards a mortgage payment or a car payment or more of a need than a want. That's my feeling, and that's what we've seen in the last quarter. So one stock that you might look at acquiring, and I would look at picking it up relatively soon, is Dollar General. Dollar General came out yesterday. They missed across the board. They lowered future guidance, and they lost 32% of their value. That is a huge, huge discount. So when you're looking at buying stocks, one of the things that you want to look at is the price to value ratio. And when something drops this significantly in a single day's trading session, it often recovers 2 to 3, maybe 5% in the next week or so. And I think that's what this stock is going to do. So it's already trading up a 1.5%, call it round numbers, in the pre-market session this morning. I would expect that we'd see this hit $88 or $89 today. So getting in early on this one could give you a little bit of a gain today, a healthy gain percentage-wise. Selling it, taking your profits would be my recommendation at that point, and then wait for it to fall back into the $84, $85 range next week. It'll likely find a bottom again next week. You can buy it, you can hold it through to the end of the year. You'll probably make another 5 to 10% easily by the end of the year. So that's my pick on Dollar General. Walmart has been getting some good traction out of all these because it's been favorable in this consumer discretionary market due to its size and market share in the marketplace itself, particularly North America. And then you have some of the others, again, health and healthcare not really doing much right now, kind of a mixed bag of red and green. I'm staying away from transport, talked about that exhaustively over the last month, so I won't go there. And then we get into oil. And as I said, crude was up. It's up slightly. It had been down. It was up, then down. Now it's back up. It's now, okay, now it's even. So it's bouncing around that $76 level, but it's coming back, and all of the oil stocks have been hit relatively hard. So I think we're going to see a positive day, green on the screen for oil. So it'd be an interesting day to look at an oil stock that hasn't quite recovered to where it may have been in the last month, maybe at closer, a lower low than some of the others, and has more room to move, and and get a position in that. Take a small position in that, ride it up, and then sell it, take your profits. We go into technology. Technology, the NASDAQ futures are up, so it should be a good day. Now, the tech sector has been hit hard again this week, waiting for the the NVIDIA earnings to come out on NASDAQ. And they came out, and although they were favorable, the stock still went down. I think that could turn today. I think we'll get a little bit of a gain on NVIDIA. Now the story, the narrative in the tech space has really shifted. So we've heard some talk this morning about NVIDIA and Microsoft and Apple and some other large tech names going to fund another round into OpenAI. We're hearing that in the next generation of the iPhone, you're going to have ChatGPT functionality in the iPhone. And that's a good sign, in my opinion, for AI. It's a great sign for NVIDIA, because if Apple embeds AI in its phone, it's going to offload some of the AI functionality from the phone to back-end servers, and those servers are likely going to be running NVIDIA Blackwell chips in the future. So NVIDIA is still a super strong buy, in my opinion, as we hear about more and more companies incorporating AI into their strategy. That means they're going to require the processing power of NVIDIA chips. So NVIDIA is taking a short-term hit because it wasn't able to grow in percentage terms quarter after quarter as it has in the past, because it's just likely not possible to have that kind of sustainable growth at those high levels on a consistent basis, but it doesn't mean it's not growing. I mean, if you look at the growth trajectory, it's phenomenal. So I would be buying into NVIDIA at this point. If we look at CRM oddly enough got hit. So again, here's a company, had great earnings, good future forecast, and it was up, and then it dropped yesterday, and it's down today in the pre-market. So this is, again, a bit of a mystery, but I do believe this will come back. And at 256, I think you're going to have a $290 stock by the end of the year. Net looks like it's going to have a good start to the day. This has been off fairly significantly. I missed CrowdStrike. CrowdStrike's up again today. So again, a company that released better than expected earnings, even due to the global outage, which really is phenomenal if they achieve their revenue goals and beat their revenue goals with a huge global outage like that. They are looking like they're going to continue to go up. Now, they've been hit hard. This was a $290, $330 stock within only the last 60 days. So they totally got clobbered on that outage or after the outage, but it is starting to climb back. And from a long-term hold perspective, I think it's a strong buy. We scroll down further. Palo Alto, great earnings. They were up significantly on earnings. They were up again yesterday. They look like they're up in the pre-market session today. Some of the travel stocks have been down. Airbnb got hit. If we see Airbnb drop further, I think this could be an interesting buy. If we take a look at Airbnb over 6 months, you can see that it's definitely down 24% in the last 6 months, and it's hit a relative low in the 111, 112 range here in the last 6 months. Looking at the 1 year, it's again at its lows for the year as well. So if you do believe that spending for travel, whether it includes airlines or not, but Airbnb related travel and rentals over hotels is going to pick up, then this could be an interesting time to buy into Airbnb. AMD, another chip maker, it looks like it's up this morning. We've got Qualcomm up, and that's probably based on some of the on the discussion and narrative around Apple, because they are a supplier to the iPhone maker. We've got Workday up, and up again yesterday as well. Lam Research was up and then down at the last part of the day yesterday. It's in the high 700 range. I think this is an extremely attractive purchase at this range. It looks like it's going to open in the low 800s, but if this is not an $1,100 stock by the end of this year, I would be very, very surprised. And if it is, I'm going to ask you to tell 10 of your friends to subscribe to the channel, because my predictions are pretty strong and I can help them make some money and use their money to make more money for themselves into the remainder of this year and next year. So please subscribe to the channel if you haven't already. Scrolling again through the list, we've got Meta. Meta had an okay day. It was up a lot yesterday and then dove down towards the mid-afternoon session. It looks like it's up again pre-market. I like Meta in the $518 to $20 range. I think it could come down a little bit more if the overall market does, but I think we've had kind of now a couple of mini corrections in the NASDAQ space, and I believe that when we get earnings out of Meta in the fall timeframe, I can't see them being anything but extremely positive and a beat. And I think this is going to be a $560 to $600 stock by the end of 2024. BABA looks like it's making a pretty big move pre-market. Not sure what's behind that. It didn't have great earnings, but maybe we're going to see the Chinese consumer market come back. We've got NVIDIA. NVIDIA's in the green today. It was off $8 yesterday. Not significant. And again, rather odd, being that it had a revenue earnings beat and a good future forecast. But that is just what happens from time to time, especially with fan favorites or market favorites. They can pull back on even positive earnings reports. Google has been down, or is down, in the low 160s. I think it's a super attractive purchase in this range. This should be a $185 to $200 stock by the end of the year. Adobe had a great day. Adobe still has earnings to release, so we're a couple weeks out. September 12th is when Adobe announces. I think Adobe is going to get above $600 after its earnings release. So I am definitely a bull or bullish on Adobe, and I would be buying into Adobe going into earnings. TSM down at 169. I love TSM under 170. It looks like it's going to maybe break through 170 today. Again, I think TSM, being one of the major manufacturers for a number of semiconductor companies, but NVIDIA being one, I think it has nothing but a positive roadmap ahead of it, and there's very little risk in owning TSM at this point. And then we get down into financials. So I was wrong on Affirm earnings. They came out, they blew it out of the market with their earnings this quarter, coming in on Wednesday afternoon, and look at what they've done. They shot up, gosh, 25, almost 30% there in the course of a single day yesterday. So I wouldn't be buying it at this point. I think it's a little rich, but that was a big miss on our part. Didn't call that. However, we called SoFi. We were looking at SoFi. I've been talking about this for the last month or month and a half, saying that when it was in the $6, even down in the 590s, that it was going to $8. And sure enough, it was 803 yesterday. It's up 15% pre-market. This is a stock we have made an absolute killing on a percentage basis. So again, hopefully you've been taking some of the advice on the channel. And if you have and you've been successful, I'd love to hear about it in the comments. Share some of your success, even some of your failures, with others so that we can all learn from that. I'm not reluctant to tell you where I've made mistakes and where I've made good decisions. Hopefully my good decisions and guidance for you has been more positive than negative. That's certainly my goal here on the channel. Get down further into JP Morgan, Morgan Stanley, and Goldman, and we can see finance as a whole, I think, is a great sector to be in right now. So if you want to take some risk out of your portfolio, I would move out of tech, potentially and into finance, because I think everything in this category here is going to do very well as we come into the October earnings report, which is only 6 weeks out. So we're not that far. We're still getting Q2 earnings, but we're almost into Q3 earnings. It's incredible how one season, one quarter just rolls into the next. But these are companies that are very well positioned. And I think all of them, once we get a rate cut, are going to be up 5 and 10% heading into the fall timeframe. So on any kind of pullback, I would be getting into these finance stocks. And I think you understand which ones are my faves. But if you don't, JP Morgan, obviously down in the low 200s would be a buy for sure. Morgan Stanley right now in the low 100s is a buy. And Goldman, I like it better in the 490s, and I think it'll get there. But at 510, I still find that it's pretty attractive, and I think that's going to be a 540, 560 kind of dollar stock towards the end of the year. Charles Schwab, I think it's going to make a comeback as well and get up into the 75 range by the end of the year. And then we've got some of the smaller regionals, M&T being a fan favorite, Zion, another one, Bank of California, and others. So that's where we are today. I hope these videos are helping you. I hope I'm providing you some good guidance. If you do like them, please subscribe to the channel. I'd love to see the channel grow and more people benefit from the experience I have in trading in the